Hi, this is Arvind. Do you think there is any business in the world that can run without the suppliers? I don't think so that is possible. Let's take few example. A small coffee shop. So even for the coffee shop owner, there is a dependency on a supplier to supply coffee beans, to supply cups, to supply milk, to supply electricity, to supply coffee machines, right? So there are a lot of dependencies for any business on the suppliers to provide the basic material to run the business. So that is how supplier, I see, they are the most important in any business. In this module, we'll talk about the non-PO based sourcing. When we deal with suppliers, we do two types of purchases: PO based purchases and non PO based purchases. PO based purchases are generally of large value, quantity, specific shape, and sizes. Let's take an example: 100 pieces of t shirt to be purchased for office staff. In such case, will you not go to market and check with at least 4 and 5 suppliers and check the quality, standards and rates and decide who is offering the best prices? Same way, procurement department will also go through standard policy and procedure to make sure they're getting the best quotes from the suppliers, and then they will issue a purchase order to purchase the 100 t-shirts which are required for the office staff. Now let's talk about a key topic: non-PO based purchases. Any purchase that is a small value goes through a non-purchase. A simple example is tea and snacks. So tea and snacks for office staff, this is a small expense, right? It is not practical to go to 4 to 5 different shops and take a quotation and then give a purchase order based on the best and the cheapest snack for the office and party. So as any small repair and maintenance work, like repair of an electrical switch, etc. So this is so small amount that cannot go through a standard procurement process, right? This is hardly very difficult or impossible. I'm not saying impossible, but it is very difficult to go to a market and ask for a quotation for a very small amount of repair, for which the supplier or the vendor may not be interested to really do that kind of a work. Few more examples are unplanned expenses, like donation to a charity. If suppose management has decided to donate an amount for charity as part of the sales and promotion expense, while the amount can be large and recipient is the preferred charity institution, there is no question of inviting quotations from the different charity institutions, right? In such kind of an expenses, there is no need to have a purchase order. So another such example is government taxes, penalties. You have no choice here and to have to make the payment on time for the government and taxes. So there are many such examples we'll discuss in next few minutes. I hope by now you understand what are the non-PO type of expenses. FNSEO is a consulting and the training institute. For individuals, we offer domain training, interview coaching, and mentoring for the next level promotions. Subscribe this channel for more content on P2P, O2C and R2R. You can also join Telegram channel for job and knowledge hub. So basically, if you make non-PO purchase, you'll get non-PO invoice from the supplier. Hence the non-PO invoices are those where purchase order is not issued by the company. While best practices is to have a purchase order compliance for all the invoices and bills, but there is always some exception. And I just explained you few examples some time back. Let's now get into more details around the non-PO invoices. So indicative reason for not having a PO invoices are, there are certain expenses where amount due is not unknown until the billing is generated. These are primarily utility based invoices or service based invoices. These bill statements are considered as non-PO invoices. Almost all businesses generally receive non-PO invoices or bills or statements. Few examples are telephone bill, electricity bills, tax payments such as GST, income tax, credit card statements. We receive monthly statements for the utility bills, taxes and credit card statements. They have to be always processed under non-PO because usage, bill amount, they differ each month and cannot be defined and fixed. These vendors do not accept any purchase order. Their billings are based on usage. Some companies uses a best practices to generate a PO against all such non-PO expenses from internal control standpoints. That means once the credit card statement is received, PO is created as internal control to reconcile the statement. This is generally done to avoid and duplicate payments. So we'll discuss this in detail when we discuss the PO invoices. Please note, there are small companies or startups that do not have dedicated procurement teams or procurement systems, and hence they generally purchase a raw material or other items on the counter, and generally most of the invoices of such companies are non-PO based invoices. So few more examples where purchase order is not necessarily issued. Instead, long duration contracts are signed by the parties. In such case, vendor may not send an invoice at all but expects payment to be released as per interval agreed in the contract. Therefore, the company need to remember to make the payment as per terms. So this is not different than individual paying a rent. For example, a building is leased for a period of 5 to 6 years, right? And there is an agreement that every month a rent of a few thousand rupees or few $1,000 that needs to be paid. Since the contract is signed for a long duration, a rental payment has to be made every month, irrespective whether the invoice for the rent is received or not, right? Similar is the case for equipment leases, consulting fees, recruitment fees, minor repairs and maintenance, which we discussed some time back, marketing expenses, utility, in utility, electricity, telephone, municipal taxes, mobile bill, etc. We just discussed in the past. So let me take examples of a consulting fees. Consulting fees is also for a defined period. For example, there is a consultant who is appointed for a defined period, 6 to 9 months, right? And then while a contract is signed, so every month a consultant will issue an invoice against which the payment has to be done, right? So these are all the cases of a non-PO invoices, and this goes through a different approval cycle only post which a payment is made. So if you want to understand the detailed workflow of the non-PO invoices, please look at the next video. The video ID is DP06. Thank you.